Hey everyone, thanks for checking in to our latest TDR Small Cap Sunday podcast. Hope you all had a great weekend. Here we are again, 5 new companies, including three cannabis companies this week. I'm sure you'll like them as we dive into it and some interesting numbers and some Canadian companies. Again, I've said this the last week or two. We really need to dive deep into the Canadian market and realize there's some companies that are really turning the corner, and the medical market is actually flourishing for some of these companies. So let's welcome in TDR lead financial analyst Bill McNarland. Good to see you, sir. How are things?
Things are great. Yeah, had a nice weekend at the beach with the family and enjoying the summer.
You back down in Mexico?
Yeah, down in Mexico, enjoying some time down here. I'll be still here for another 3 weeks.
You're right. Well, look, we set our sights on 5 new companies, and as I said off the top, three cannabis companies, including some observations from SNDL earnings that was announced back on Friday, August the 2nd. So I think there's some people that will really find this interesting as far as what our takeaways are from their latest numbers, and most importantly, if it's whether a stock that we would own or not. But before we get into that, before we do, as we usually do, all views on the TDR Small Cap Sunday podcast and the guests on this podcast are purely opinion. You should not treat any opinions by us or our guests as investment advice. And the views on this podcast are solely intended to be informational and are not investment advice. Okay, let's begin. Our first company, it's a cannabis company here on the show. They're out of Quebec. It's called MTL Cannabis Corp. We actually did a story on them highlighting some of their recent earnings, which were dynamite. They're based out of Montreal. They're led by CEO Michael Perrin, who was involved in the cannabis space in the early days. Then left, took a hiatus, then came back, and now he's running MTL Cannabis, and appears that he's got this thing heading in the right direction. So, Bill, tell us more on what they're building in both Canada and internationally.
Well, this is where I became really interested in the company. First of all, to be frank, I hadn't heard of the company before they had
Me
these fantastic earnings.
neither.
Yeah, and so that was great to learn about something new. And so they're really focused one on the Canadian medical market, which
Yep.
sometimes you kind of think, well, if cannabis is legal in Canada, why is there still a focus on medical use? Well, it's because a lot of people they want to take a medical approach to it. There's also insurance as well. So this is a focus of theirs. But also they have an international expansion operations. They're working with expansion plans and also have exports now. Germany, Australia, Poland, Portugal, United
Wow.
Kingdom. So this
Yeah.
was something that was quite interesting.
So I'm just looking at this as well. They have a facility, 57,000 square feet. This is up in Quebec. Do you know much about that facility at all?
That's a large facility, but also
Decent
they
size.
want to do things that are very environmentally friendly as well with a focus, and that's something they present to their buyers of their end products as well.
Okay, some of the numbers. They trade on the CSC under the ticker symbol MTLC. Current share price 21 cents, market cap 25 million, shares outstanding 117 million. However, daily volume is only 2,500. So we've spoken to this company recently, Bill, and it was outlined to us that the management's first priority was to get the company operating in the right direction, which appears that they've done, followed by housekeeping to bring attention to the daily trading volume. When we look at this company, the numbers really stand out. Market cap, as I said, 25 million, yet they did $65 million in revenue over the last year, with growth as much as 165% during that time period. Gross margin was a whopping 49.9%. So what are people missing here?
Yeah, I was really impressed with this because we've all heard of Aurora Cannabis, and they have about 25% of the revenue of Aurora. So I was really surprised with that revenue growth and those margins because Canada is very competitive. But this strategy they have that's also involving medical and also involving the international expansion is working. And that's also why their SG&A is very reasonable at 27.3%. And so this is something that has legs on it. And with this work and these margins that they have here, they had real net income of 2.5 million, EBITDA of 7.3. This was a real surprise to see how well this company was doing and under the
Yeah.
radar.
Yeah, no kidding. Let's take a look now at their levered free cash flow along with CapEx. What did you find?
So they have 10.5 million in leverage free cash flow in the last 12 months. So they've done well, very well. But they have capital expenditures at 3.3. So they're pushing this back into the business, and this is going to lead, potentially to additional revenues as well. So this looks like something really interesting to be taking a look at.
Do we know what their working capital is? What'd you find?
Well, this is one thing. This was a bit of a yellow flag. They had working capital that's negative. but they've turned so positively into the free cash flow. And I think this is managed because they're still investing into capital expenditures.
Yep.
Working capital works itself out if you have positive cash flow as a business. So this was something that I took note of. This could be part of the reason that maybe the stock has come down a bit, but it's something that wasn't overly concerning to me compared to if the company had negative cash flow.
Yeah. Well, what cannabis company has not been hit hard right now? But at the end of the day, it's all about positive net income, which eventually I think a lot of companies hope to turn the space or turn the corner, I should say, with rescheduling in the U.S. And as much as they're operating in Canada, it just appears that everything in the U.S. is going to have an effect on the overall industry. But all signs point in the right direction. Again, 65 million in revenue and growth was 165% over the last 12 months. Moment of truth time. Would you own this stock?
Yeah, absolutely. You're buying something at three times cash flow, and it's growing. The cash flow is going to be growing if you're increasing the revenue like that, and they have healthy margins. This to me just seemed like a no-brainer to pick up.
Good find. We've had a few people actually reach out to us recently about this company. So, all right, first green check mark, MTL Cannabis on the CSC under the ticker symbol MTLC. All right, moving on to company number two. It's a software company called Asure. Am I pronouncing that correctly?
Yeah, I believe so. Yeah.
Okay, ticker symbol ASUR, located in Austin, Texas. Which software company isn't located in Austin as that industry or market continues to flourish? Current share price $8.10, market cap 214 million, shares outstanding are 26.5 million, and daily trading volume is healthy at 1 million. So, first up, Bill, how has this stock performed recently and what type of company is it?
The stock has been off a little bit on the year, but still holding steady. It's down about 10% year to date. But this is an interesting business. I was interested because I've had some business operations in the U.S. before, and where I was acting kind of as the CFO or CEO, and HR is always such a difficulty. There's legacy players; they're very expensive, very difficult to deal with. And so I said, "Oh, this is an established but newer, modern entrant. This is a business that I'm interested in learning about what they're offering."
Okay, so this company, as I said here, based on what you just said, they have a presence in all 50 states, supports businesses in managing their workforce, staying compliant with HR laws, and accessing growing capital. So, how exactly do you know? Have an idea as to how the software works?
Yeah, well, here's I'll share with you some problems and then what it can help you with. If you're a business, and let's say you're based in New York State, and you want to hire a remote employee in Texas, or they want to move post COVID to Texas, you actually are responsible for paying taxes to New York State on payroll, even though Texas doesn't have a state tax for the
Yes.
individual. And so
Yeah.
if you get caught up with this in 2 years, the employee is going to get fined, you're going to get fined. So you need something to help you understand the laws and what additional paperwork to file. But there was another nuance, like what happens if the spouse of the employee is in the armed forces? Well, then all of a sudden the rules don't apply because you're allowed to move around in the armed forces. So there's so many problems understanding the US payroll landscape, and it's expensive. The legacy players are shockingly expensive how much they charge for these services, and they're cumbersome to work with.
That's
So a
interesting.
modern group that understands this, that adds value, it's very sticky as well. You don't change groups very often. This was something I thought that was very interesting, and see why they're doing well in the US.
Time to join the armed forces, right?
Yeah, you got a few more options, or your spouse.
Yeah, exactly. Let's go to the charts. What was their revenue last year along with growth?
Yeah, so this is real. They had revenue of 115 million. The revenue is a bit bumpy. It's not just consistent over year. Like the last 12
Right.
months was just under 1%, but 3 years is 22%, 5 years is 13.4. But look at this gross margin. And this is where software is beautiful.
Big.
69.9.
69%. That's crazy. So how
Yeah.
much working capital do they currently have? And what did you find there?
The balance sheet, there's no issues. They got working capital of 23.6 million, 20 million sitting in cash. They're earning, positive EBITDA of 11 million last year, the last 12 months. So everything there was no concerns that came up there.
All right. So presence in all 50 states. Finally, levered free cash flow. What'd you learn?
Yeah, they have free cash flow the last 12 months over $10 million. They're putting money back into becoming better in the future. They had R&D spending of 7.2 million. So that's really interesting that they're reinvesting heavily back in the business. So this became a very compelling story.
All right, so get your green marker out once again because I'm going to ask the question: would you own the stock? It appears like it's a yes.
Yeah, absolutely. I've seen the problem that they're solving, and I think it's a big problem. And post COVID, it even got worse with people working remotely, and that's here to stay. So I think there's a very big opportunity for them long term.
All right, let's now shift to company number three as we go back to the cannabis space, and a company called Avicanna trades on the TSX Venture under the ticker symbol AVCN and on the OTC under the ticker symbol AVCNF. Current share price 29 cents, market cap is 34 million, and shares outstanding are 109.3 million. But daily trading volume, it looks like, is a ghost town, only 9,500. So, first up, what does this company do, and why, I should say, how does it grab your attention?
Yeah, so this is a cannabis company in Canada. They also
Yep.
offer services. What's interesting here is they're very focused on the medical market, and they have a very interesting a strategic arrangement with a partnership with a group called Shoppers Drug Mart in Canada, which would be the largest drugstore. It's similar to a Walgreens, larger for their footprint
Huge.
in Canada. And so this was very interesting. It caught my attention. Again, I wasn't as familiar with them until I came through my research and I found them starting to look at some numbers. And so I said, well, let's dig more and find out some more.
All right. So they have established partnerships. And like you said, Shoppers Drug Mart, I think a lot of people understand in this cannabis space. I remember going back to the early days of Afria when they announced a partnership with Shoppers Drug Mart, and that made the stock rip. But like all cannabis companies, this stock has been hit hard. So could you see as far as this company, like this changing based on what they're doing recently?
What I saw was interesting. Besides, we were going to look at the financials. It made me think again, as along with our first company, MTL, about how important the medical market is long term, and how that stays even when countries like Canada have legalization. And
Right.
imagine if you're someone 60 years of age, you're unfamiliar with cannabis, you did reading, you're not going to a dispensary to buy a gummy. Instead, you want to seek advice from the medical community for this. And so this is still a very important part. They have the
Good point.
partnerships. So I said, this is something, let's look at the financials a little further to see how they're doing.
Okay. Let's go to the charts now. What did you find as far as revenue last year along with growth percentage?
Revenue is flying. They had revenue growth last 12
Wow.
months of 427%. 3 years is
Wow.
120, and 5 years is 169. Again, with the medical, it's decent. They have 41% gross margin, so they're moving in the right direction. They still had some negative EBITDA of minus 6 million, but this is a company that really has a tremendous growth curve.
Yeah, well, what I'm seeing more as a common theme, I'm learning more and more about the Canadian market, and it's not what people I think necessarily think. There's some real companies that have really lasered in on execution and efficiency, which is extremely important in a highly competitive market. But the perception of the Canadian cannabis market is look, there's a lot of companies that aren't around anymore, but for those that are, like you said in earlier podcasts, that efficiency and execution is going to be extremely important, which this company so far looks like it's demonstrating. Okay, so gross margin reported what along with SG&A and EBITDA for the company?
Yeah. So the gross margin is 41%. They had SG&A spending, and they're still spending heavily back into this revenue growth. It's around
Yeah.
69%. And so they had negative EBIT of minus 6.4. But we'll look a little bit closer when we look at the balance sheet and the cash flow statement there.
Okay, and what are we finding when it comes to that?
The balance sheet, they have, again, they have a yellow flag here of some negative working capital. But when
Okay.
I look at the next chart on the cash flow, they've turned the corner this year. In the last 12 months, they had positive leverage free cash flow of almost $1 million.
Okay.
So that's still a yellow flag. This company is not out of the woods yet. But any company that is forgetting about, no longer has a burn and is moving positive cash flow, it becomes a new life or a new time in that company cycle.
All part of a growing industry, that's for sure. Okay, levered free cash flow again showed what?
Almost $1 million in the last 12 months. Not
Yeah.
that significant, but it's positive. And that's going in the right direction with a company with such high revenue growth.
Okay, moment of truth. Would you own the stock?
I would buy that. I'm very interested in long term globally the medical growth of cannabis, and even with different rule changes that support recreational use. I still think there's a very good opportunity for execution in the medical market.
Well, you make some good points, and I think a lot of people would agree with you when it comes to the medical side. And again, as I keep reiterating, US, if they reschedule obviously cannabis, I think the whole medical landscape, especially as data starts to come out of the US, will actually be very flourishing for a lot of companies that focus in this space, not only in the US, but Canada as well. But all in all, Avicanna, TSX, under the ticker symbol AVCN. If I said TSX Venture earlier by mistake, it's actually on the TSX. All right, 3 companies down and 2 companies to go, including one last cannabis company. And for all you viewers out there, yes, we will get into SNDL for everybody that loves this specific company. But before we do that, let's now focus on a company called Aterian, trades on the NASDAQ under the ticker symbol ATER, located in New Jersey. Current share price is $2.80. Market cap is 21.98 million. Shares outstanding are 7.82 million, and daily trading volume is around 400,000. Bill, company focuses on selling high quality consumer products through Amazon. So sounds rather interesting. So how exactly does it work?
Yeah, I was interested. I looked into this about 5, 6 years ago with the kids. We were looking about putting a product on Amazon to sell it, and we ended up deciding at the time that we didn't have the profit margin for it. And so I wanted to learn more about this business. They have steamers, they have potties for kids, appliances, a fancy some ones from Mueller and stuff. And so I said, well, let's find out. Have the numbers changed? Can you go out and find a good quality product and sell it, have Amazon do everything for you and be successful? So this is what we're going to find out about this.
So when it comes to this company, like what kind of costs are we looking at when working with Amazon? Because I assume that the costs would be rather, I don't want to say expensive, but is there something that would grab your attention that you may not be aware of?
Yeah, so when dealing with Amazon, you have a selling service fees. You have something also potentially called a referral fee. Then you have your shipping fees. And then you have your fulfillment by Amazon fee. And
Jeepers.
so this all adds up. Like if you have stuff in their warehouse, and it's very convenient. Myself, I've authored a few books, and you sell a book overnight. You have no idea Amazon already printed it and shipped it to someone, and the next month you're going to get your $2.
Yeah.
But they do everything for you, and it's amazing. But the problem is there's a very high cost, and so it's interesting to look at a business that as a large to see how they're doing.
A lot of companies, I bet, do it though. It's the reason why Jeff Bezos, man, is a billionaire. But all in all, the way you describe that kind of explains the whole tax system in Canada. There's like a tax after a tax after a tax. But all right, let's now switch to revenue over the last 12 months. What'd you find, and how about growth percentage?
So it's real. They're $127 million their revenue over the last 12 months, but their
Okay.
revenue growth has been minus 40% over the last 12 months, and
Ooh,
we see that also in their 3 years is minus 8.4. So that's the first thing that we find out here with
that's a
uh,
biggie.
Amazon. You're going to have a bumpy ride because things come and go out of style. And I remember once I wrote a book that was really popular for a month. And then I thought, wow, I'm going to just do this for the rest of my time until retirement. And then the next month I didn't sell any. It's a bumpy ride, what
The
people are
world we
looking
live
for
in.
at different times and such. And so their porta potty for kids maybe was popular a few years ago, but doesn't mean it's necessarily popular, growing popularity every year.
It's part of the daily grind, right? You have an idea. Well, you think it's only going to work once. You got to keep on going. But that's the world we live in. Show me what you've got lately, because our attention span, I should say, is so short now in this day and age. But interesting stuff and interesting feedback. Okay, gross margin showed what along with SG&A?
The gross margin was 50.3%. So at first I saw that, I was like, hey, that's pretty interesting. They're making a good spread there. They found a product, they can sell it for twice the cost. But the SG&A is where they get hit. Their SG&A is 73.8%. So when they sell a
Wow.
$100 item, they're paying $73 in cost to get it out.
What's their burn rate?
Yeah, so we look at it, their EBITDA was negative 30 million
Wow.
last year. So they're selling 127 million of stuff out the door, but they're losing $30 million because of all the costs that they get hit with from Amazon.
And then you look at the alternative solutions, and it's like you go where the audience is, but you pay for it, right?
Yeah. At least it's a variable fee instead of having to invest it all up front, but still, it's very hard to get it just right.
All right. All right. So don't let the revenue fool you. Is this a stock that you would own? Yes or no?
No, it's just it's going in the wrong direction and it has a big burn. They had negative cash flow of 6 million, but that EBITDA number of -30 is really scary, and that eventually will become negative cash flow. The revenue is going the wrong way. I've dealt with groups like Amazon before. It's so expensive. Even with a product that you have 50% margin on, not enough. You got to find something with more margin to make a living.
Yeah. Some of these brands, it looks like a great idea, but once you understand the business model, you realize do your due diligence. That's for sure. All right, 4 companies down, 1 to go. Last company is our last cannabis company. It's Canadian, I should say, cannabis LP and alcohol retailer SNDL. So for all our followers at SNDL, here you go. They reported their latest earnings back on August 2nd. Based off of that, I want to review some of the observations on this latest report where the company currently sits, along with growing potential and ultimately whether or not this is a stock that you would own, Bill. So, what was your overall take with the revenue that they reported in their earnings roughly a week and a half ago, almost 2 weeks ago?
The one trend that was there is I noticed that the liquor was slowing and the cannabis was strong. And there were some nuances there because Easter had fall it changed around a little bit, which quarter it was included in the last couple of years. But still, it was showing that cannabis had some good strength, but not so much in the liquor.
That is a trend we're seeing more and more. And I know a lot of the revenue is from liquor, but industry trends, especially with the younger generation, alcohol is falling off a cliff where Canadian, I should say, cannabis um, revenue across the board for a lot of these companies continues to grow. But that's just the time we're living in now, and it's the growth of an industry.
Yeah. I see that I see that culturally, like Mexico historically. I go to a lot of family events and different things in Mexico. And historically that was a culture known for, the fiesta.
Yep.
I don't see it anymore. People are getting together, having a great meal or whatever. And it's just that the alcohol use is really dying off.
I
It's
know.
just something that I noticed. Yeah.
Cannabis is kind of like the internet, and alcohol, I think, is like pen and paper. It's becoming more dated, and like, yeah, you can have a good time, but at the same time, it's still a long way. Let's not get ahead of ourselves.
Yeah, yeah,
Alcohol is
yeah,
still a
yeah, yeah,
massive
yeah.
market, but think about 20, 30 years from now. I just the consumer trends that'll take place. If you can still have a good time minus the hangover, of course, that's going to be a selection or a choice that people are going to take any day of the week. Okay. Next up, let's look at streamlining. The company outlined that this is a huge focal point. So, all in all, this was basically in an attempt to improve their gross margins. So, what's your takeaway here?
Yeah, and they did that. Hats off to them. They increased their gross margins by about 3%. That's huge. Also, because the liquor business has narrower margins than cannabis. So if they could do that on the overall company, that was very good. And they've made announcements saying that they're strategically looking their business and cutting costs. And I see that they're doing this for sure.
Okay, next up, big takeaway from their latest numbers involving operating costs. What'd you learn?
Yeah, again, their operating costs are really coming down. They have this goal of $20 million of annual savings over the next year. They're going to be really focused out on Q3. They've already had some savings, and I see that they're going to do that. And we'll look at in a minute there to see if the Wall Street analysts agree with them being able to cut that much expenses out.
Okay, that's going to come up in just a moment. Cash flow, what'd you find?
Yeah, and they're still not net positive cash flow, but they're making big progress. They went from negative 5.6 million in Q2 2024 from negative 18.5. So they're definitely going in the right direction. Those improvements in gross margin and cost cutting is being noted for sure.
Yeah. All right, let's review now net income. What did you learn here and your takeaway?
Yeah, their net income is still not there. But when are they going to be a profitable company? Wall Street analysts for 2024 on
Yep.
consensus
Yep.
feels that they're going to have positive income. So that means that they're expecting big cost savings in Q3, Q4, and going right to the bottom line and being net positive for the full year. So that's something that Wall Street analysts they believe in the plan that the cost cutting is coming and is going to lead to positive net income.
When it came to savings in Q3, Q4, again, a focal point was just streamlining. Like, is there anything that grabbed your attention as to how they were able to improve? Did they outline a lot of this?
They already struck me as an efficient company, and
Yeah,
and
I
I,
know.
I'm familiar. I'm very familiar with the brand because
Great
I reside
CEO.
in Alberta. So
Yeah.
I've been to their liquor stores. I've been to their cannabis stores. They are an efficient business, and I know the different times we've had calls and meetings with them as well. This is an efficient group. So overall, I can see it definitely in the gross margin how they improved that, cutting back on their costs, and operationally, I believe they're going to do that 20 million, and so do Wall Street analysts because they feel that they're going to be profitable by the end of the year.
Yeah. Good point. All right, let's talk growth. The U.S. is front and center for this company, I should say, in the near term when you factor in Sunstream. What about their international expansion? I know there's a lot of people that are familiar with the story, but what can you find and what, I guess, intrigues you, or is there any challenges that you're seeing with regards to the international?
I was impressed with it. It seems like a well thought out plan. They have their shipping going off to Israel, then also pursuing the EU GMP certification, which would extend their footprint. And so this seems to be something that'll add some growth on the horizon in the future.
Okay, and then finally, what'd you find as far as their current balance sheet?
Here's the point with SDNL. If they're a little bit behind on their earnings or their cash flow is still negative, they have an ironclad balance sheet. They have 783 million in unrestricted cash and marketable securities,
Crazy.
and no outstanding debt. They have the time to continue to work on their plan without any concern.
That's a war chest, my friend. This was
Yeah.
a meme stock, though, right? When it was Sundial, and they were able to raise. Kudos to Zach George, and I know he gets a lot of great credit and a very well respected amongst the retail community, investor community, and really, for that matter, the industry. So, finally, let's bring out our green check mark again for the final stock here tonight. This is a stock that you would own, yes?
Yeah, sure, for sure. I live in the local area where they're from. I understand their business, and they have a tremendous fan community. I appreciate all the emails and notes I get from
Hey,
them.
they got a lot.
Honestly, very rarely, no one ever emails me, but SNDL fans do send me notes when I write something or have something to say.
We could be talking about laws in Thailand with a lawyer, and suddenly somebody comes up and has SNDL with a heart on it. It just doesn't matter. There's somehow SNDL is somehow incorporated in every narrative topic that we discuss. Okay, so another 4 green check marks and 1 X. So be careful, obviously, with the 1 X. This is not on sale. It's a trap. So all in all, great work, my friend. And let us know what you thought. What are your feedback? As far as us, when we did some coverage on SNDL, do you agree with what we outlined? Anything you want to add, please leave comments below and make sure to smash on that like button. And as well, bottom right-hand corner, make sure to subscribe to our Baked In newsletter. In the meantime, Bill, enjoy the beach in Mexico and the rest of your weekend. And we will catch back up with you next week.
Great. You too.
All right. Thanks, Bill. Hey everyone, thanks again for watching. Hey, we're humming along, and it's all because of you and the audience and community that we're building. So again, make sure to smash on that like button and leave lots of comments. Who do we have up next? You let us know. Who should we interview? What companies? Is there anything you like? Is there anything we're missing? We're all here for you. Let's get on with each other and build this community for all of us to benefit. As usual, don't forget to subscribe to our channel because in the end, we wouldn't be here without you. Thanks again, everyone.